Okay, Dow is down 55. It had been up 97. Let's show you the money language as the Fed wrapped its two-day meeting in its statement today, saying business investment growth has moderated from the rapid pace it saw earlier in the year. So we put this on the screen because the markets were fine until that came out. But the Fed left rates unchanged today. Now, December, that's the next meeting. There is a 71% chance of a quarter-point rate hike. Yesterday, it was at 80, so we're down 9 percentage points. We have the Fed, a divided Congress, U.S. tariffs on Chinese imports kicking up to 25% on January 1st, and who knows what else. So when it comes to the U.S. economy and your portfolio, what's the good, what's the bad, what's the ugly? We bring in Wells Fargo senior economist Mark Vitner and Andy Brenner, NatAlliance Securities global fixed income head. All right, Andy, to you first. Don your Clint Eastwood hat on. Give us your good, your bad, and your ugly.
Well, the good is that the Senate was pretty well maintained by the Republicans, so you have a split Congress. So it gives the president leeway of which to negotiate with Congress. And now a divided Congress, you have some give and take. So, but we do think that infrastructure will pass. As far as the bad, you still have the tariffs out there. The Chinese economy is not good. Tariffs are going to start to increase prices in the U.S. And as far as the ugly goes, Liz, it's all about the Fed. There's no question about it.
Our trader Sarge at the top of the show called the Fed clowns. Would you go that far?
No, I wouldn't, but I think they're looking backwards, and I think they're missing the biggest thing. They didn't even talk about it in today's announcement, and that is the effect the balance sheet is having on the markets. This at $50 billion a month or $600 billion a year, it is really hurting the markets. And as you look outward, I think we're going to see significantly higher interest rates, and I think eventually the stock market will wake up to that and have their own set of problems.
Mark Vitner. Good, bad, ugly. Go for it.
I see a lot more good out there. I mean, the economy is strong in so many ways. We have very strong job growth. We're beginning to see stronger wage growth, and the strength in the labor markets is broadening, and it's impacting more parts of the country. In terms of the bad, I think that the bad really is in some of the messaging by the Fed. I don't have a problem with the taking rates up to 3 1/4. I don't necessarily believe that you have to do that in the next year, which is what they have in their dot plot. I mean, if we did it in 18 months, I don't think we'd be letting the inflationary horse out of the barn. So I think the rhetoric from the Fed, they really have oversold their intentions. And I think they're forgetting that enhanced forward guidance was an additional form of easing when rates were low. It's now an additional form of tightening now that rates are going up, in addition to reducing the balance sheet and raising rates. In terms of the ugly, it's trade. I mean, there's no doubt about it. We were getting this tit for tat back and forth with China as to who can top what, instead of going the other way and reducing the impact on the economy.
So that's where you and Andy actually kind of have an overlap. And we're looking at President Trump and Xi Jinping of China on the screen. G20, November 30th. We're going. I will be there. Andy, what do you need to hear that will make you feel better about this whole situation?
Look, we really want to see what the president has up his sleeve. If it was politics, the elections are passed. Let's come to a negotiation and agreement with China. So we really want something positive to be coming out of there. And if we see it, we could have a very nice year-end rally in equities. If we don't see it, it's more of the same, and I think it's really going to be hurtful to the economy.
Mark, what we have seen here at Countdown is that in this final hour, anytime there's any headline regarding a trade or tariff deal or war, boom, the markets start gyrating and moving. Andy just referenced that we could have a great rally for equities if there is a deal. What do you see for equities? What would be something that breaks up any kind of logjam here, although we've had such a great week?
Well, we've had a great week because I think that the markets are relieved the election's behind us and there was no surprises in it. I mean, we got exactly what we were looking for. And gridlock is generally good for the markets. I think that if it looks like Congress is going to really just go full bore into investigations, and I don't know that you'll get that indication before the end of the year. I think that would upend the markets a little bit. We don't really have to have any really concrete agreements on trade. If we could just dial it back a little bit and say, hey, we're not going to go through with more retaliatory tariffs. We're just going to dial it back. I think we could get a nice rally.
Andy, you're a fixed income guy. I just saw the 10-year go by on the ticker here, and it says 3.2 I don't know. Wait a minute. Did I see that right? 3.235 for the 10-year yield. Are you worried about that, or does that look like business as usual?
Liz, I am horrified as to what the interest rates are going to be doing. With all the supply that's coming to market, with the lack of deficit relief that we see, and the amount of corporate supply coming, this will be the high close of the year. And in the 326 is the high print of the year.
Look at the 30-year fixed rate for mortgages, 4.94%. Listen, historically, Mark, I know you remember when rates were 18% when people were buying homes in the 80s. But right now, there's a whole generation of people who never saw rates above 6%. So to see it now coming up to back around 5 is
or even above 5 it's
right.
unnerving. And housing's been down for the last 6 months. Residential investment, in terms of GDP, has been down 5 of the last 6 quarters. Does the Fed really want mortgage rates to be 50 basis points higher going into the spring selling season in 2019? I don't think that's a good idea.
I love the bowls on your suspenders, Mark. And Andy, you've got a great tie with dollar bills on it. You guys came to play. Mark Vitner, Andy Brenner, thank you very much.